Hello everyone, in this video we're going to be looking at how we can use fib retracements in our trading to help determine the most likely scenarios. So the outline of this video, we're going to be looking at how to actually draw fib retracements using the fib retracement tool, how to identify likely bull and bear flags, how to identify equilibriums, we will go over what both of those patterns are, and some examples in the real world showing how things have played out in the past. So before I get into an example of actually drawing the fib retracement, you use the Alt and F key at the same time with your magnet on. I'll show you what that means, where to place the anchor to do these measurements. And I want to make sure that we all know that this applies to all time frames, whether you're a swing trader using monthly, weekly, daily time frames, or a day trader using 2 5-minute, hourly time frames. It is worthwhile to learn. So here we are looking at TradingView.com, which in my opinion is the best website out there for charting and technical analysis from a user-friendly perspective. And I want to make sure that my magnet is enabled here over on the left, and that just ensures that I only need to be close to where I want it to be, and it will automatically lock it in there. So I press Alt and F, I don't have to hold it, and then I click where I want my fib retracement to start. This is my measuring point. This is the anchor that I'm going to use. And that's because we had a clear period of consolidation. We established a level of support here, and then we saw a bull move from that level. This is the Netflix daily time frame. And the question I have is this daily consolidation a bull flag? And so we're going to go over the next slide just exactly what the criteria is to determine if something is a bull flag. But the measurement goes from the bottom of the move to the top of the move, and then we are measuring how much is the retracement from there. Likewise, I can be looking at it from the opposing perspective. I can be looking at it from the top of a move into a drop. I find the top of the move, I find the low, and I want to measure how significant is this bounce. And the major levels here on our fib retracement are the 382, the 50, and the 65. And I use those as a guide, and I'll tell you exactly how on this next slide. So when determining if something is or is not a bull or bear flag, we have fib retracements to help us with that information. We know the ideal flags have a retracement of 382 or less, and I'll show you on the chart exactly what that means. We have declining volume as an ideal flag as well, and I'll show you how to establish a trade game plan based on a potential bull flag or bear flag, and we'll go over some examples. So this is actually a trade that I just took a couple days ago. It is Litecoin on the hourly time frame, and I made an entry based on the assumption that something was a bull flag. So again, it's important to identify trends using price levels because that's where our anchors go. Every little higher low that forms here is a potential level to use an anchor off of. So again, magnet, Alt F, and I was looking at this move and I was watching, is this a bull flag? Because we had topped out here and we had started this hourly consolidation. And so I'm looking at this retracement and I'm saying, okay, if 382 holds, and all this 382 level means is that the pullback has given back. These are percentages, 38.2% or less. Where do these numbers come from? It has to do with the Fibonacci sequence. It's seen all throughout nature and the universe, and you can apply it to stocks and trading as well. So if something pulls back to the 0.5, that means it gave back 50% of the move to the upside. If it only pulls back 382, then obviously, logically speaking, that's more bullish. We gave back less of the bull move, and that favors continuation. So when something is likely to be a bull flag, it holds the 382 and favors continuation. If we see a pullback of 50% or greater, that's when we favor an equilibrium, and that's the pattern we're going to talk about after we go through these flag examples. So what I did is I looked at this consolidation, and there's a number of clues. Number one, we don't want to see increasing bear volume. We topped out here on that initial move, and then there was no increasing bear volume on this pullback, so no red flags. Then I looked at this little double bottom. We had a low of this hourly candle at 178.39, and we held that level to the penny. So I know there's a double bottom of support mixed in there as well to be paying attention to. Also, I use the EMAs. I use the EMA 12 here, and oftentimes that EMA 12 will align with the 382 retracement, and I'll be able to just use that as my visual guide and make a simple statement. If EMA 12 is holding, then it's going to be a bull flag. But in this instance, I recognized the double bottom. I said, okay, if this is a bull flag on the hourly time frame, I want to make an entry. There were a lot of other factors as to why I was watching Litecoin for an entry, but it was a very simple statement. If 178.39 support holds, then it's a bull flag. If that level does not hold, I want to stop out and not be in this trade. So I established a position after these 3 candles had already formed. On this candle is when I'm establishing my position, and I had an average of about 180, and my stop goes under 178. Because again, if that level breaks, then the odds are that this is not a bull flag, and I'm wrong. The entire premise of the trade for me is that that is a bull flag. So my stop is tight and close by. And in the end, we ended up breaking out significantly. There were a lot of other factors as to why we were watching for this to be a laggard breakout, but it all started from this bull flag. Let's look at another example on the monthly time frame for IIPR. This has been a very strong name. And again, looking at this move, this is the low of the COVID dump into a straight bull ripper to all-time highs. So we have our fib retracement. I put on my magnet, Alt F, start at the low, go to the high of a move. Is this consolidation healthy? Are we likely to see continuation? Once we form that low and then we hold that support and we can see that it's above the 382, I can then say, as long as 160.91 support holds, this is a potential bull flag. And at that point, it becomes the burden of proof is on the bears. Okay, bears, prove to me this is not a bull flag. Break support. Pull back more than 382 retracement. Because if you don't, it's a bull flag. So again, when you're going with the trend, it's the opposing side that has to prove otherwise. There's something I call the gray zone as well. You know, you can pull back here, and if you hold 382, then very clearly it favors a flag. But if you drop down, what if you pull back 40% or 45%? It's still possible you see continuation from there. I call this area right here the gray zone because it's possible to go both ways. You could pull back and see continuation from there. You could pull back and form an equilibrium from there. So that's when it becomes a little bit less clear, and it could go either way. But we know if it's over the 382 retracement, it favors a flag. Now we're going to look at some bear flags. This is Roku on the weekly time frame. So we had a month pullback, and I want to know, is this a bear flag? And again, this is in hindsight. We're going to look at a couple examples that have not played out yet, but we had our all-time high, and I don't have my magnet on right now, so it's just estimating a little bit. Again, if I wanted exact, I use the magnet, but we have our high, our low of the drop on this bounce. Is this a bear flag? And we can see we didn't even get close to the 382 retracement. So again, I start at the top and I go to the low, and I want to know how significant is this bounce and what does it favor as the most likely scenario. If the bounce does not break the 382 retracement, a bear flag remains the most likely scenario. If it does, that's when we look for the equilibrium, which we'll talk about in just a moment. But we can see Roku was a weak enough bounce to not even get close to the 382 retracement, and it ended up confirming a bear flag and dropping to a lower low. So one more example here. This is PENN, P-E-N-N, on the monthly time frame. So on the way up, if we had the question, is this a bull flag of consolidation once that top was hit? What's our answer? As soon as we pull back below the 382 and we drop down under the 50%, we say, nope, a bull flag is not likely because the percentage distance that the bulls have to make up to get back to that high is significant. If we only pull back this much, it's not a significant amount of distance that needs to be covered to go back to that higher high. Great, okay, that answers that question. Now that we've found a bounce, we started this bounce. So measuring from the high to our low of the drop, I want to know, is this going to be a bear flag that results in a lower low? And the answer is, that is still on the table. So this is one that you can watch over the next few months and see, can the bulls get over the 382 retracement to start creating the space for the equilibrium? And again, what the equilibrium is a lower high and higher low tightening pattern, which happens very often in the stock world after significant volatility. And certainly we've had very significant volatility on this move, both to the upside and to the downside. So if we're going to see an equilibrium, we have to get enough bounce follow through to get a 50% retracement plus, because that then tells us we've created enough space here for a higher low to form compared to the recent low the next time we consolidate. But again, at this point, we have only bounced maybe 25% retracement. So it's certainly too soon to say whether this is a bear flag or not. And if we start to see signs on the shorter term time frame showing us losses of uptrend, For example, if I'm looking at a potential weekly bear flag, if the daily chart loses the higher lows without breaking the 382 retracement, then the odds of a weekly bear flag increase. So we can zoom into the shorter term time frames and look for details as well. So now we're going to talk about equilibriums, the most common pattern that you will find in stocks. And again, it's after volatility on the 5-minute time frame, the weekly, the monthly. It doesn't matter what time frame you're looking at. This pattern is everywhere. It's when you see the retracement more than 50%, keeping in mind there's a gray zone with anything that's between the 382 and the 50. But when you're more than 50%, that is when you scout the equilibrium to become the more likely scenario. Ideally, you see declining volume as the range tightens, which is what happens most often with equilibrium patterns. And we'll talk about establishing a game plan around this pattern and give you some examples. I view it like a pendulum because as the pendulum swings due to gravity, you see a smaller and smaller range until it eventually reaches what we view as an inflection point in stocks where we know a break is going to be imminent. We can't necessarily say it's about to break out bullish or bearish. We have some clues with the prevailing trend that we can look to, but we know volatility is incoming because things get so tight to the point that you've either got to break bull or break bear in the near term, and that helps us determine when volatility is likely to be incoming. So here's an example using the monthly time frame for NIO. We had a massive breakout to all-time highs. So I again start my anchor on the last period of consolidation, that low before the breakout took place. I go all the way up to the all-time high, and I look at this pullback. Is it going to be a bull flag as soon as we drop down under 382? I know the probabilities shift. And it's important to recognize that a lot of people like to try and make predictions with trading, but when you're using this fib retracement tool, you're getting new information and you are shifting your perspective of what is the most likely scenario as you're getting this new information. So I can be looking for a bull flag on the monthly, but as soon as we drop under that level, I can say, nope, that's no longer the most likely scenario. And I can change my perspective. As a trader, you must be able to constantly change your perspective as we're getting new information because that new information changes probabilities. So as soon as we drop down over the 50% retracement, we know an equilibrium is then the most likely scenario. So here we have a monthly equilibrium forming. Breakout, higher low, lower high, and now we're scouting for a higher low. Anything above this low of 3071 is a monthly higher low, remaining within this tightening range. And then from there, we're going to look for a lower high, anything under 5513. So the most likely scenario on this chart is clearly an equilibrium at this point. So bulls can be using this to establish a trade game plan. So we're using, if I'm looking for a monthly equilibrium and a monthly higher low, then my stop is 3071 because as soon as that level breaks, we're then in a downtrend with a lower high and lower low, and that tells me I'm wrong. It's not an equilibrium. When we have this wide of a range forming, it is the unlikely scenario can take place. You know, if you have a 90% chance of something taking place, that means 1 out of every 10 chances it's not going to happen. So you have to, number one, prepare for that with stop losses, but the information that will tell you a less likely scenario is playing out. For example, if NIO were to just drop down and lose monthly support rather than forming an equilibrium, it has to be on increasing volume. The less likely scenario of an equilibrium playing out has to be with increasing volume. If the volume continues to drop off, which is again the most common pattern with equilibriums, declining volume, if the volume keeps dropping off, we will likely form an equilibrium. So bulls are establishing a trade game plan where maybe they're scaling in. One entry at 37, one entry at 35, one entry at 33, and then their stop goes under 3071. And that's a way to anticipate a higher low and attempt to make that entry. From there, we will scout a lower high, anything under 5513, and we're going to be watching for this equilibrium to tighten up potentially for the next few months. And just as an example, same sector, Tesla, has already been forming this equilibrium. We had our high of the breakout, our low of the pullback, lower high set. We held support. So here's where NIO is trying to hold support. Tesla already did it. And now the big question we have for Tesla over the next month or so, can the bulls break 781 resistance, or do we reject and remain in the equilibrium? What do we need to see for a bull break of that level? In my opinion, it will have to be increasing volume for resistance to break. And if we don't see the bulls increasing volume, we're going to scout a monthly lower high and then another monthly higher low, anything above 546. for this pattern to continue tightening into next year. So here's now an example from a day trading perspective, 5-minute time frame for IWM. So I'm looking at this drop here. And again, you get to a point where if you're comfortable with this over a few years, you do this in your head and you can visually see whether an equilibrium or a flag is most likely. But as we're learning here, I can see this drop and say, okay, on this drop, are we going to see continuation of this downtrend? I can see the 5-minute bounce got all the way up towards the 60% retracement. So I know it is less likely to be a flag because of the size of it bounce. Okay, great. So what's most likely? An equilibrium. So at that point, we have our high where I just measured from our anchor point, our low, which was the other end, lower high was set, and we held support. So if I can determine that an equilibrium is the most likely scenario, I can scale in and play off of a support level. If it's likely to be a flag and I'm playing off of support, I'm going to get stopped out. If it's likely to be an equilibrium and I'm playing off support, that's when the odds are in my favor to potentially make an entry and have support hold. We then formed another lower high and another higher low. So again, this is your classic equilibrium tightening range, and the bull break took place. As soon as we broke 227.72, it's confirmation of an equilibrium bull break, but we have to keep in mind that that just means zoom out to the longer term time frame and then pay attention to what's going on that longer term chart. So now I can go to the hourly and say, okay, the hourly for IWM from the high of pre-market this morning, this could still be a potential hourly bear flag. So I have to keep in mind that even though the 5-minute pattern broke bull and maybe my day trade went well and I had a win, can't rule out the longer term time frames because this is still a possible hourly bear flag. I would need that equilibrium bull break to keep the 5-minute uptrend for a long time to get all the way back to that 50% retracement, which currently is sitting up at 228.57. So if we do not make our way to 228.57, then we have to be cautious of an hourly bear flag. So this is how all the different time frames overlay on top of each other. And as soon as we get resolution, or I should say, as soon as we get the conclusion of what we're watching for on one time frame, what you automatically do every single time is then zoom out to a longer term perspective to then do it all over again. Okay, what's the most likely scenario now on this longer term time frame? And that is how we keep a complete picture of what's going on in markets or on individual names, and we don't get faked out. Because if I look at a 5-minute bull break and then just think that the bulls are going to keep control for the rest of the day from there, there's many times where I'm going to be dead wrong. So the longer term time frame helps us determine that. So hopefully this video was helpful in terms of how to use fib retracements for identifying likely flags or equilibriums. As with any educational video that I make, as soon as I start making it, I realize this could be a 3-hour long course. So there's a lot more in-depth information here, but I want to keep this nice and short to just give an initial overview. And now it's up to you to just play around with this. Just practice measuring on your own, practice determining with paper, write down, I think this is most likely to be an equilibrium. I think this is most likely to be a flag. And then watch how it plays out. Keeping in mind, you can think something's going to be a flag, and then as soon as that retracement goes to 50% or beyond, you change your perspective because our perspective is constantly evolving with the new information that we are getting from these price action, from the price action and from these indicators. So feel free to ask any questions on this video. I'll do my best to answer them. And I appreciate you watching. Thanks for the likes, subscribes, thumbs, all that stuff. See you next time.